Welcome back to EBM Info. This video, I want to look at a question from the question paper of May 2025. So we are going to look at question 4.5. So we're going to look at the preparation of the income statement. The question reads, use the information in the trading and profit and loss account to draw up the income statement for Mrs. Solani. So we have to draw up the income statement. Then you have to use the addendum, which is attached. So to answer question 4.5, which is this question that we are looking at. So we're given the financial account section whereby we have the trading account, we have also the profit and loss account. So this is the information that we have. And of course, our question has got 20 marks. So from the information that we are given, we are supposed to come up with the income statement. And we know that the income statement, it starts on sales. All the information that we're going to put in the income statement, we're going to take the information from the trading account and the profit and loss account. So this is the income statement that we have. Of course, we are going to start with our sales. We have the debit, we also have the credit. So in terms of our sales, we refer back to what we have according to the question. So if you come at this point, we see that we have got a sales here, which is 333,290. So that's where we are going to start from. So if you come to our income statement, of course, we have got our sales already entered. And remember, our sales should be on the credit side of the income statement, our income statement account. So we come to the credit side, we put our sales is 333,290. And of course, we've got a folio column that we have to put our cents. We've got 00. So we have now cost of sales. We have to calculate cost of sales. So for cost of sales, remember the formula that we use to calculate cost of sales, whereby you say cost of sales is equals to our opening stock. We add our purchases. Of course, if we have got our purchase returns, we have to subtract them. If we have got any carriage on purchases, we add them. And then we subtract your closing stock. So this is the formula that we're going to use according to the information that we have. So you'd see that in some questions you won't be having the purchase returns and the carried on purchases. So you simply say opening stock plus purchases minus closing stock. So in this case, we have got opening stock, purchases, and closing stock only. So we check what is our opening stock. So the opening stock will be in the trading account and is indicated here, which is 30,300. So this is exactly the same figure that we're going to put there. So we come, we put our 30,300. And then we have to add our purchases. So by adding our purchases, we refer back again to see where do we have our purchases. Of course, our purchases, we have it here. And all the opening stock and purchases should go to the debt side. So we've got 108,240. So with that, we see that we can add the two to get the goods available for sales, which is this part. So if we add that is 10,300 plus 108,240, we are going to get a total of 138,540. So with that now, we can now be able to calculate our cost of sales by saying opening stock, add purchases minus closing stock. So we are now saying our cost of sales. If we say our closing stock, we have it input our closing stock, so we refer back to check what is the closing stock of which closing stock we are given it here. which is 30,730. So we can see that our closing stock we are subtracting. So we can put in brackets and show that we are subtracting. Or you can put it as a minus. So if you now subtract goods available for sales minus closing stock, 130,540 minus 10,730, you get a cost of sales, of which we have got the description of cost of sales here. So it means you have to put your figure here as a cost of sales, which is 107, 107,810. So here we have 107,810. So that is what we have. We put our cents. So with that now, we have our cost of sales, we have our sales. So it means the next step is to calculate our gross income. So we are here. We have to calculate this gross income, which is the gross profit. We can call it the gross profit. So we are saying the description that we have here is a gross profit. So to get our gross profit, we say our sales minus cost of sales. So basically, we are saying gross profit is equals to sales minus cost of sales. So exactly what we have there. So our cost of sales, as we are subtracting here, we have to put our cost of sales in brackets. So by doing so, we are now saying 333,290 minus 107,810. And then we get our gross profit, which is supposed to be 225,480. And of course, we do not have anything in the folio, so we can just put our zeros. So here we are saying is 225,480. So we go to other income. So other income is just a description that we have there as other income, and then we list the other income beneath that. So we've got rent income according to our question. So we check where we have our rent income. Of course, rent income is here, which is 24,000. So we have to subtract 24,000. So in this case, we are putting our rent income as 24,000. So we just input our 24,000. So with that, we only have one other income. So it means we put our other income here as 24,000, which is at the total of other income. So to get our gross income, we are saying our gross profit plus other income. Gross income is equals to gross profit plus other income. So we are saying 225,480 plus 24,000, and then we have our gross income. So we can try to add that. We get 249,480. So we can put our indication of runs in each and every figure that we have. So this is what we have, and then we go on to check in terms of the other figures that we have. We've got operating expenses. So we have to list all the operating expenses beneath that. So in terms of our 30,000, it's a negative. So we can put our runs and then we put a negative behind. So in terms of our operating expenses, we have wages, telephone, salaries, and water and electricity. So we start with wages. We check what's the amount for wages that we have. We have got 10,000. So of course, all expenses come on the debt side. So we are saying 10,000. And then for telephone, 4,600. And then we go to our salaries, 40,000. Then water and electricity, we check again what we have. We have got 9,000 and 9,200. So you'd see that these are the only expenses that we have. If you refer back, you'd see that we have the next one is capital, which represents the net profit. So it's not an expense. We leave that. We now go to add all the expenses that we have. So if we add, that is our 10,000 plus 4,600 plus 40,000 plus 9,200, you get your total for expenses is 63,800. And we have to subtract our operating expenses from gross income. So if you say gross income minus operating expenses, you get a net profit. If it's the positive answer that you get here, it will be a net profit. But if it's a negative, it's a net loss. So 249,480 minus 63,800. So we can just try to calculate. You are going to get 185,608. So basically, this is what we have in the preparation of the income statement. So this is what we have, and we'll see that the parts that we have in terms of calculating each and every formula that we have to take note, like all the calculation of our gross profit, calculation of our cost of sales. We just take note of the formulas that are being used, and then we also check of calculation of the net profit. So this is basically what we have. So thank you for listening, and hopefully the video was helpful, and let's meet again in the next video.